following is paid programming. Welcome to Something More with Chris Boyd, certified financial planner practitioner and founder of Asset Management Resources, LLC, a registered investment advisor firm. We call it Something More because we like to talk not only about those important dollar and cents issues, but also the quality of life issues that make the money matters matter. Here he is, your fulfillment facilitator, your partner in prosperity, advising clients across the country, your host, J. Christopher Boyd.
Welcome to the program, and thanks for being with us. I'm here with Jeff Perry. And Jeff, this episode, I think we need to talk a little bit about something that came up. It comes up regularly. I have clients who get hit up with things that are meant to scare them, scare tactics to get a newsletter subscription or pushing gold or something like that. And then maybe we can talk a little bit about alternative investments. When do you use things like gold or hedge strategies, things of that sort?
It's not just from clients. I hear it from neighbors. I hear it from some family members. It's just people, they're getting these sales pitches, whether it's in the mail, online, or mostly on TV is where I see them. I don't know if there's other places that people see them, but they just fear has been, say this, fear has been a sales tactic, not just of investments, if you will. But fear has been a sales tactic of many salesmen over the years. Like, if you don't have this, you're going to die, or you need to buy this, so you're going to have all these diseases. And if you have a disease, you need to buy this.
Yeah,
it's
right.
It's really it's one thing right after another, especially certain times of the day, middle of the afternoon or late at night. They do target people watching these shows, certain shows as well. To say,
yeah, you do notice that. Like just watching the news, even you'll see things that are geared toward play on people's fears, whether it's health related or financial concerns. The thing that came up most recently that was on my mind was, and I've had a similar thing routine. This comes up very regularly, just different iterations, different people that are proliferating it. But the one that came up recently was, it's basically this doomsday scenario of like things are really going to go to hell, when it comes to your financial, the economy, the financial, whatever. And what it was either an email or a text that one of our clients received, and I've had other clients in the past who've gotten same MO, different purveyor, but same MO. All these things that play on people's anxieties about what's likely to happen, and it taps into recent fears, that recency bias or whatever, right?
Whatever you've seen or felt recently, they play on.
Yeah, so they start off with, this person has made every right call since 1990, whatever, right?
Well, that's a lie.
Yeah,
nobody's right all the time.
No, and they're like, oh, he called this, he called the financial crisis, he called the whatever, like all this stuff. And if you're a perpetual doom and gloom sayer, well, you're going to be right sometimes, and so that's how someone can be making that call, right?
If you say it's going to rain every day, you're going to be right eventually.
Sometimes it's going to rain, right? So that's part of what's happening here, and then. I've seen ones where it's, somebody who is highly regarded in finance, somebody else who is, the secretary or undersecretary of something under, President Reagan or whoever, whatever it is, right? You get these presumed credentials, but you don't know anything about it. And then there's this very polished video or write up, that draws you in. And it plays on all these fears of all that can go wrong.
Yeah.
And if you're prone, predisposed to being frustrated, whether it's politically or, financially, you have worries, it draws you in by tapping into those fears.
I almost wonder if during heightened political seasons, which we're in, right? We're just starting but race to the presidential race. So there's more and more stories from either side of the aisle and more ads now, and they use fear. I mean, you see some of these ads and they're just showing violence, or they're showing collapse, or they're showing
Yeah, I mean, what's
poverty.
are you talking about political ads?
I am, and so I'm wondering if
What's the one with the nuclear, mushroom cloud, right?
that's
That's a
right.
classic one, right?
Yeah, absolutely.
In
That was very
Massachusetts, the Willie Horton was a
Willie
classic.
Horton. It can be
These are
related to immigration. It can be related to any issue, any
yeah,
party. So let's
yeah.
not go. My question, though, my wondering is, I wonder if the sales tactics of people who are selling products and services or whatever we're going to talk about, if they time those, because you said they come and they go,
Yeah,
while other things are happening
yeah.
same time, which creates a general sense of uncertainty or fear in the public's mind. So then they say, for example, I've seen a lot of, you need to buy gold, right? You need to buy
Yeah.
gold from people who sell gold. They're
That
telling
comes
you
up a
to buy
lot.
gold, right?
Yeah, or the spokesperson, Devaney, I think was one, and I forget who else, but you've seen these
Oh, they
uh,
pay celebrities, right?
celebrity or whatever
Right.
to kind of uh, imply some, s- you know, uh, s- reality or a sense of like confidence to the consumer, a familiar face and whatever.
After they
Um,
set the hook of the world's ending.
yes, right, and
Right.
in some cases, it's not to your point. Like we get the people who are promoting sometimes, you got to have gold, are actually trying to sell you gold through their brokerage. They might own some kind of a gold brokerage distributor or whatever, and
Right.
so they a lot of times what these do is they start off with sign up for our newsletter, or be a subscriber of some kind, where they get a monthly inducement there, where they get you on
Subscription,
the
right?
hook.
Yep.
And then they again kind of just bombard you with all these anxiety laden
Hmm.
messages, which then lead you to another course of action, which may be a different newsletter. Get our newsletter about how to benefit, how to make money in these scenarios. This
Sure.
one's for energy, this one's for real estate, whatever it might be, right? And you get these subscribe for this other thing. So it, like, one leads into another, leads into another. Or, as we said, oftentimes it leads to a call to action that is to buy, gold is a common example. Okay.
I want to make a side note here for people who might be thinking this, because I'm thinking it. Um, when you buy, subscribe to a newsletter and you receive this information, it can almost look like financial advice,
Yeah.
but
Yeah.
there's no, you can correct me if I'm wrong here, but there's no regulation over newsletters. If it's strictly a newsletter and it falls into that category, there's certainly no fiduciary responsibility,
It
meaning they
can
don't have
be
to.
it can be the case. Now,
Right.
some RIAs, registered investment advisor firms that are regulated, uh, do provide subscriptions to a newsletter.
Right.
And in that case, and that's a paid subscription.
Right.
So you are in effect paying for financial advice, right? And so they are more likely to be regulated but a publisher
Right.
can publish anything and not necessarily be regulated. Now, one of the ones that we just were talking about that came up very recently, we looked up who this person was, and there had been some SEC sanction on their activities, because they were disseminating what was perceived to be financial advice, and in an irresponsible way, that they had been um, fined, I think it was. But in any case, that's not always the case. To your point, a lot of times this is it's just a publisher publishing an opinion.
Well,
And
that's exactly where I was going. And so if you have one of these newsletters or subscribe to them or just pick one up somewhere,
yeah,
first thing you need to think about is this wasn't written for you. as
Right.
I
For
mean,
your particular needs or circumstances. Yeah.
right, your own risk tolerance, how you view risk, what your portfolio is, what your income needs are, what your assets are,
Yeah.
and who knows when it was written. And markets move, commodities such as gold move. So you just have to take these things with a real heavy grain of skepticism, because it's not for you. It's often designed or written or promoted or advertised by someone who's actually selling something that they're trying to convince you that you should buy because it's in your best interest to buy it, but they're selling it. So it's not always as it seems. You really have to pause and talk to somebody. If you're inclined to do it, if you're really being sold on it, if you're really feeling like they're right,
Yeah.
that's okay, but pause just before you make any real big financial decision. Pause, and if you have a trusted financial advisor, that's great. You can call them. If you have a lawyer, you can call them. But talk to someone else who's not trying to sell you this, who you trust and who has your
Right.
best interest at heart, and say, you know what? I've been looking at this. What do you think?
Now, I think a lot of times people are inclined to believe the uh, actor in this case, the bad actor in my scenario.
Yeah, the spokesman. Yeah,
Yeah, when I don't mean the actor talking about, I mean the person purveying this newsletter or whatever, right?
sure.
And because one, it's polished, it's professionally created, it's designed to hook you in, right?
Right.
And it's playing on all those fears that you have. It ties into all those anxieties, and oftentimes the financial advisor is going to say, yeah, I think that, don't worry about that, or whatever, right? They're if it's something that's kind of intended to be stimulating to get you to take action, they're going to discount it. Now, it's worth some conversation about the issues in depth, but um, there are times when you just have to identify, do I have confidence that the person I'm dealing with is deliberate, thoughtful about these concerns, and has given them, credible consideration, uh, or are they just, not necessarily, they just have the always say, hey, hang in there, the market's always going to be good. And
Right.
the reality is markets aren't always good, but that doesn't necessarily mean you should drastically alter your portfolio or financial planning approach. I think that's one of those things that we have to, clarify. It's tempting to say, I'm going to only be in the market when it goes up. Sounds like a good plan, right? Let's buy stock. Let's sort of, sounds like, who's the baseball guy with all the funny isms?
Yogi Bear.
Yogi Berra. Yeah. So, it seems like it should be one of those. Just if buy stocks, just don't own them when they go down.
Right.
That's simple, right?
Yeah. So why shouldn't
Um,
everybody do that?
Buy low, sell high,
Hmm.
Um, but the reality is that's not easy to do. And if you're trying to jump in and out of the market in reality, when, there, as much as I can't tell you how many people have tried to come up with a system where they can do this, where they can always be ahead of market movements. And, even market timing practices are often built on momentum, and momentum is not a forward looking methodology. It is a backward looking methodology saying, are we identifying a trend, and will that trend continue? It's presumed that trends continue until they don't.
Until they don't.
And the reality is that it is enormously difficult to really predict these things. Okay. So don't get fooled in the sense that there's no perfect mechanism for avoiding volatility. And we like good volatility, we just don't like bad volatility. We want markets to move, we want prices to change, And unfortunately, what we try to do is make some adjustments on the edges to say, where does something look expensive? Oh, maybe we want to discount that. Where do things look inexpensive? Oh, maybe we're going to add some of that. Where do we find value on where to be on the yield curve at a given moment, or credit spreads, and all the things we talk about on our show from time to time. And it's not easy to navigate these things, but you probably want to think in terms of the way we would at least encourage people to do is have reserves, because there will be rainy days. There will be volatile times, and we want to have a gradation of risk. Some things with greater stability and liquidity and access, and some that are geared toward enduring those volatile things over time. And maybe some combination that is designed to make it more palatable to the level of risk we're willing to endure.
So that's very well said, Chris. Back to the subject of marketing by fear and advertisements. A lot of times they're talking about alternative investments, we'll call them. They're not the mainstream investments that if you go to a trusted financial advisor, these items are not usually going to be brought up.
Yeah.
How do you feel, and how do you process questions from clients or your own views on, I'll just say, alternative investments? And
it's a broad category, right?
Yeah, so it can be gold, it could be, in the last 5 years or so, maybe some people put cryptocurrency into that bucket.
Yeah,
commodities.
Oftentimes
options.
they could be these kind of things. They could also be things that are illiquid.
Sure, absolutely.
So, they're not traded every day, so they don't appear to have the same level of volatility. So, when it comes to our clientele, we tend to avoid the illiquid assets, just because who we deal with are retirees, and we don't necessarily want to have to wait, 3, 5, 10 years to have a liquidity event. Okay. So private equity type stuff, or the things that might relate to that, not so much in our wheelhouse.
Right.
When it comes to things that are more commodities or futures, or that kind of thing, we tend not to use those. Though there are times we've used them as a risk hedging tool for people who have a very concentrated position, or there can be reasons to make use of these kinds of resources. But generally speaking,
not as a get rich quick type option.
No, not as a a leveraged attempt to have access, but in a magnified way.
Right.
That's something we typically are not. That's not what we're trying to do with our clientele. So when it comes to gold, precious metals, this is a common commodity type approach. It's not to say we don't use commodities. There are times we do, but we use it more connected to what's happening with inflation, perhaps what's happening with our view of the dollar, and how that might imply directionally what might happen with another asset class. Commodities or precious metals,
energy, maybe, right?
Exactly. So so when we use these kinds of investments, generally speaking, beyond whatever they might have representation in our, market, exposure broadly, if we're going to put a greater commitment to a lot of these, it tends to be because we think there's a tactical reason to include them, and there's a driver behind that we're focused on. The dollar is a good example of that. What do we think is driving the dollar, and why would it be advantageous to be in this alternative asset class? I guess my point is, when we've run into people who said, "Hey, let's buy gold," and some people do it as a doomsday kind of hedge, just in case I want to have a little gold coins or a gold bar or something in their possession, and they want it to be in their vault, in their
I'm thinking about other issues
box, or in their own house or whatever.
Yeah,
but
there's other issues with that.
Yeah, and when it comes to the purchase of gold in these fashion, you're going to pay a premium for a commission of significant amount to both buy and sell. So factor that into your thinking. When we do it through an exchange traded fund, which is much more inexpensive and more efficient for the purchase. It's very inexpensive. It is backed by physical gold, but it is backed in a vault that you're not going to see it in your possession, but it's a holding in your portfolio that you can easily transact. So in any case, we've kind of covered the time we have, Jeff. Thanks for giving me time on this. And I want to mention to our listeners, if you need help with any of your dealing with some of these issues, or if you think you might be susceptible to something that sounds a little bit maybe playing on your fears, reach out. You can connect with us through our office at either on our website, amrfinancial.com, or you can give us a call. I also want to just do a quick reminder to you that we have the Retirement Red Zone webinar coming up on the 20th of September. So if you haven't registered, please do. Anyone who's getting near retirement or even in retirement, you might find benefit from this webinar. Jeff, thanks for your time. And
my pleasure.
Thanks for being with us. Until next time, keep striving for something more.
Thank you for listening to Something More with Chris Boyd. Call us for help, whether it's financial planning, portfolio management, insurance concerns, or those quality of life issues that make the money matters matter. Whatever's on your mind, visit us at amrfinancial.com or call us toll free at 866-771-8901 or send us your questions to radio@amrfinancial.com.
You're listening to Something More with Chris Boyd, Financial Talk Show.
Asset Management Resources, LLC, and J. Christopher Boyd, CFP, provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is in the nature of general financial comments and cannot be relied upon as pertaining to your specific situation. AMR, LLC cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.